Hey everyone, Justin here. So Tesla stock was able to rally back from its low this morning right around $575 a share and close the day out at $627 a share, which is a turnaround of nearly 10%. So it looks like yesterday was a perfect opportunity to buy the dip in Tesla stock if you were looking to pick up more shares. Also, with the rebound today, I am getting close to breaking even on the Tesla stock I bought yesterday morning. I bought 1.5 shares yesterday, right around $640 per share, and it looks like we are on track to get back to that $640 price target pretty soon, and maybe even as early as tomorrow. So if you also bought shares right before the dip yesterday, it looks like there is nothing to worry about. And even though I didn't time my trade particularly well, I did miss out on an easy 10 to 15% gain. I think a bigger mistake people are making right now is avoiding buying Tesla stock altogether. And what I mean by that is some people are waiting to buy Tesla stock until it hits a price point that they are more comfortable with. And, I get it. This happens a lot of times with stocks that go up quickly, which Tesla stock definitely has over the last year. But this can be a really harmful investing practice if you make a habit out of it. When we as investors become stubborn and refuse to buy a stock until it hits the price we want, then we run the risk of never actually investing in that stock in the first place. And I should clarify that I am not talking about buying the dip. I think buying the dip is a good strategy with any stock, including Tesla. But really what I'm saying here is that a lot of investors are waiting for a dip that might never happen. So I think at a minimum, you should be willing to move your buy point up as Tesla stock also moves up, which is essentially the same as using a trailing stop loss in a way. But personally, I think a dollar cost averaging strategy is potentially the best strategy right now with Tesla stock. Continuing to buy Tesla stock at any price point whenever you have additional cash available is, I think, a long-term winning strategy. But that being said, I do think there is still plenty of room for Tesla stock to run up over the next week. We still have 6 trading days before the S&P 500 inclusion date, and if the trend can continue, then I think we should see Tesla stock break $700 a share by that inclusion day, which is the 21st. Now, that being said, it is possible that market-wide pressure could bring Tesla stock down. Like I mentioned in my last video, the COVID relief bill that was stalled yesterday could continue to weigh on the market through the end of the year. And it is possible that Tesla stock could also be affected by this. But the big catalyst for Tesla stock is the S&P 500 inclusion day. And in my opinion, this is a big enough catalyst that it essentially guarantees Tesla stock to continue rising. So even though Tesla stock looks pricey right now, and a lot of people are predicting lower prices, I personally think that there is much more upside left with Tesla stock. And like I just said, I do think that Tesla stock has a good chance of hitting new highs as we get closer to the December 21st inclusion day. With that being said, anything can happen, and there is a possibility that the bullish case I just laid out doesn't actually happen. And the biggest reason that I think the bullish case is in jeopardy comes from a statement I read that was made by the chief strategist from Interactive Brokers. He said in this article that based on the numbers, it is possible that the market has already fully priced in the demand from the S&P 500 inclusion day. And he came to this conclusion by comparing the potential demand with the rise in Tesla stock's market cap. This chief strategist estimates that index funds will need to buy approximately $60 billion worth of Tesla stock, and he also estimates that an additional $85 billion worth of Tesla stock could be bought by actively managed funds that benchmark to the index. Combined, that gives an estimated demand of roughly $145 billion by funds on the inclusion day. Now, the reason he says that demand might already be priced in is because Tesla stock's market cap has actually risen by more than the potential demand that the index funds will need. Tesla stock's market cap has risen by $170 billion since the announcement of the inclusion date was made, which that $170 billion is more than the $145 billion worth of demand from the index funds. But one thing to keep in mind is that this article was written on December 1st, and since December 1st, Tesla stock has actually risen another 7%. So it's not like demand has completely dried up at this moment. Now, it is possible that there are outside players who are intentionally driving the price of Tesla stock higher, and they would be doing this to try and force a bigger sell-off after the inclusion day, which would in turn lead to bigger profits for these players. But really, it is impossible to know what will happen between now and the inclusion day, and it is even harder to predict what will happen after the inclusion day. So with that being said, I want to run through 3 different strategies that you can pick between to try and make the most of Tesla's S&P 500 inclusion day. And keep in mind, these are not strategies that involve options trading. I'm sure there are all sorts of crazy option trades that Tesla investors are making right now, but these strategies I will talk about are much simpler. So let's go ahead and go through them one at a time. The first strategy that I want to talk about is to continue to dollar cost average into Tesla stock through the end of the year. And using this strategy means that you would consistently buy a small amount of Tesla stock each and every trading day. Now, the benefit with this strategy is that you are guaranteed to buy at least some shares on any dips that occur between now and inclusion day, and especially after inclusion day. However, using this strategy also means that you will be buying shares when they are at all-time highs. So this strategy is best for those of you who don't care to or don't want to try and predict what Tesla stock is going to do between now and the end of the year. And in my opinion, it is a perfectly fine strategy. Now, the second strategy is to load up on shares as early as possible and hope that the sell-off after the inclusion day is small enough that you come out ahead. And ideally, you would have already started implementing this strategy as soon as the S&P 500 inclusion date was announced. But that being said, if you are going to use this strategy, I would highly recommend buying shares as soon as possible, and probably buying as many shares as possible tomorrow instead of waiting until next week. And the reason I say this is because the spread between the potential gains and the potential losses before and after the inclusion day will be a lot smaller, and therefore the chances of success with using this strategy will be much lower if you do end up waiting. Now, the third option I want to talk about is to abstain from buying any Tesla shares until after the inclusion day. And this strategy is for those of you who are banking on a big sell-off after the 21st. And for some of you who are really banking on a big sell-off after the 21st, you might even temporarily sell your Tesla stock before the 21st so that you can immediately buy all of it back at a lower price when it does drop. But personally, I don't know if I necessarily recommend selling your Tesla stock just to try to bank on a big sell-off, because it's not guaranteed to happen. But with all that being said, something that we do have to realize about Tesla stock is that it is not a stock that is going to fall and stay down for very long. Even if there is a sell-off after the 21st, Tesla stock is a long-term winner. And I have talked a lot about this in my other videos, but I feel like it is worth bringing up again. So many times as investors, we get caught up in the day-to-day price swings so much that we lose sight of the long-term upward trend. And with Tesla stock, I believe that this is a company that will continue to grow and expand into other market segments. So I do think the long-term potential is quite big. Also, with Tesla's recent capital raise, they now have $20 billion in cash that they can use to fund a lot of growth initiatives. These include new factories, new research and development projects, and paying more employees to help bring new products to market even faster than before. So even though there are a lot of bears out there right now, I would not pay them any attention. If analysts at JP Morgan want to give Tesla stock a $90 price target and claim that they are only a car company, that is fine with me. But it is not going to sway my opinion on Tesla stock. And one more thing before I end this video. I don't want you to take this video or any of my other videos on Tesla stock as me simply hyping them up. I have a lot of my own personal money currently invested in Tesla stock, and I genuinely believe that investors who buy now and can hold for the next 10 plus years will be richly rewarded. So I don't want you to think that I am simply one of those YouTubers who hypes up a stock and then sells it as soon as it drops. I have talked about plenty of speculative stocks on this channel before, but I am always honest with you guys and tell you when I feel like a stock is speculative. And I have a general rule of thumb that for speculative investments, I don't invest more than 1% of my total portfolio. So the fact that Tesla stock currently makes up roughly 23% of my portfolio should tell you how confident I am in Tesla, and hence why I'm making all of these videos. But with that being said, I think that's enough for this video. If you enjoyed it, hit the like button, and if you didn't enjoy it, make sure to leave a comment for me below. Also, make sure to subscribe if you have not already done that. I would really appreciate it. And with that, thanks so much for watching, and I'll see you in the next one.